Hello ladies and gentlemen, welcome to ChrisFX. I am coming back with a savage 5-minute fair value gap trading strategy that will literally change your lives once and for all. It is a dope strategy and we're gonna go through the rules right now. The rules for this strategy are very simple. First of all, what you will need, you don't need any other time frames, you don't need a daily time frame, you don't need anything else, only the 5-minute time frame. Number one rule is to look for an impulsive move. So you want to see a very good impulse such as this one that we are seeing in this occasion right here. You want to search for very impulsive moves. So all of those, as an example, this move right here is a very impulsive move, this is a very impulsive move. Those are important things that you want to see in order to go ahead and proceed with your entries and everything else. Second of all, what you will need, I have a drawing right here, you will need to use the concept of the fair value gap. Now, I have seen that many of you still struggle with the concept of a fair value gap. I will go through it very quickly, but you will pay attention to the rules. So it's not that simple, just pay attention to the rules. A fair value gap is a gap that is being created between three candlesticks, let's say. We have candlestick number 1, let's say this huge candlestick, candlestick number 2, this one, and candlestick number 3. You see this untested gap that is created from the low of candlestick number 3 and the high of candlestick number 1. This is your fair value gap. So when we are referring to a fair value gap, this is your fair value gap, and it always requires, of course, 3 candlesticks. Now, this is another fair value gap exactly right here. You see? This gap over here, it is created from the high of candlestick number 1 and the low of candlestick number 3. So this is also 1, 2, 3, and it creates this fair value gap exactly right here. Then you change the order for the second FVG, 1, 2, 3, and you have the second fair value gap right here. Okay, this is your fair value gap. Now, what you will need in this occasion, in order to trade this strategy, you will be needing a wick. You will need a wick when you want to buy on top of candlestick number 1 out of the 3 that are creating the fair value gap, or on the bottom of candlestick number 1 out of the 3 that are creating the fair value gap. Let me place a bearish example also side by side to this one. And here I have my bearish example side by side. So in this occasion of the bullish example, you have as an example candlestick number 1, candlestick number 2, and candlestick number 3, which is this one. And those 3 are creating, of course, which fair value gap, guys? This fair value gap right here. And we can also take candlestick number 1 right here, candlestick number 2, this one, and candlestick number 3, this one for the bearish example, which create which fair value gap? This fair value gap right here. Now again, in order to use this strategy, you will be needing to have either a wick above candlestick number 1, okay, when you want to buy, when the impulse is towards the upside, you want to have a wick above candlestick number 1, or when the impulse is towards the downside and you want to short or otherwise to sell, you need to see the wick at the bottom of candlestick number 1. So it is the other way around. Otherwise, you cannot use the strategy. With the very same way, there is also another FVG that is created over here from 1, 2, 3. Does it have a wick above? Yes. This one is your wick exactly right here. So this is something that you need in order to use this strategy. Now, the second rule of this strategy is the following. If price retraces back to this area, you are entering with a pending order. Here you will be entering buys. The stop loss will go below this area right here, below the low of candlestick number 2. Okay, wherever it is, it might be here, you would place it there. And you are targeting at least a 3-to-1 reward to risk. Here, on the bearish scenario, towards the right, you will be placing again a pending order, okay, a sell limit order with the stop loss above the high of candlestick number 2, and you will be going for at least a 3-to-1 reward to risk as well. Now, remember again, candlestick number 1 needs to have the wick on the bullish scenario above when we want to buy, on the bearish scenario when we want to sell below, and your stop loss, you are entering with a pending order, and your stop loss needs to go either below candlestick number 2 when you want to buy, or above candlestick number 2 when you are shorting. Okay, remember those things. Now, I will go ahead and delete that, and we will go through some examples on the real charts. Of course, in retrospect, guys, of course, I want to show you the strategy and how the strategy works. There is now a way, before we proceed with the video, there is a way for you to join us. Instead of going ahead, because you might find it very expensive, this is my website right here. Instead of going ahead and clicking on education right here or here, and it will take you to my page where you can enter the signals, which are not the typical signals. I enter here with a stop loss there. It's not this typical bullshit that doesn't work and you know it already. It is educational. We are taking the trades live, and those who study adjust the strategy to their own needs, and they are doing fantastic. During the month of April, I made $9,126, and this happened, of course, live with a minimal investment. Those past 1.5, 2 weeks have not been the best, admittedly, but still April finished with above $9,000 in profit. Now, instead of going ahead and entering the signals like that and paying $89, you can enter with another way for free. How can I enter ChrisFX signals absolutely for free? Plus, you can win something. You can go to the best prop firms that I have. You can choose the top discounts. I have the top prop firms right here with the top discounts and the top benefits, always with my code. I'm also getting personalized discounts. So you can go ahead, purchase any account from any of those prop firms that you see right here. It doesn't matter if I make $5 from the affiliate commission or anything, and email me at chrisangelstv. I have the email in the description at gmail.com, and tell me, show me proof that you purchased through my code and link. Just a screenshot, I don't need any personal information, and I will grant you access immediately in my signal service for 1 month, absolutely for free. And every single month from then and onwards that you purchase any account, I renew it for 30 days. So I am pretty much giving you a way to enter my signals absolutely for free. Plus, you can get the best discounts, so you don't now need to go ahead and pay $89 per month. You can go ahead, purchase any account or a bunch of accounts, whatever you want to do, through my affiliate code, email me, and I will grant you access absolutely for free, and you will be able to see the success that we are having. If you are not a person who wants to become rich, guys, within 1 day, because we have those people as well, then you will find that this is amazing. Of course, the mentoring, the price has gone up, $249 for 1 hour if you want to learn. It is up to you. Let's go ahead and show some precious examples. And we are going ahead and we are starting with this example right here, which is gonna also answer all of your questions. We have some fair value gaps which have been created, one fair value gap being here, one fair value gap being here, and another fair value gap being here. Now you might ask, Chris, what am I doing in this situation? Which one am I using in order to place my entry? Well, you can do however you please, or you can, let's say, place a rule that is saying that I'm entering whichever FVG is below the 23.6% of the Fibonacci, or whatever you want to do. Now, what I will be doing, I will be going ahead and I will be using every single one of them. So, over here, in the worst case scenario, I'm gonna end up break even. One of them is gonna work. Over here, let's start with this one. Okay, This one is created out of those three candlesticks. This fair value gap right here. Now, candlestick number 1 is this. Candlestick number 2 is this. Candlestick number 3 is this. Does candlestick number 1 have a wick above? And I can go ahead, guys, and show it a little bit better, so that you will be able to see it more clearly instead of me showing it like that. So I will go ahead and use the Epic pen. We have candlestick number 1. I don't like that. I need to make it a little bit larger. We have candlestick number 1. We have candlestick number 2, and we have candlestick number 3 that create this fair value gap. Does candlestick, we want to buy, of course, here, don't we? Does candlestick number 1 have a wick above? Yes, it does. This is the wick of candlestick number 1. What did we say that we are doing in this occasion? What did I tell you that you will be doing? You will be highlighting the wick of this candlestick. The fair value gap in this occasion is just here in order for us to go ahead and check out for the further rules. If there is no fair value gap, you are not using the strategy. If there is a fair value gap, you are checking if candlestick number 1, do I want to buy? I want to buy. If candlestick number 1 has a wick above, very nice. So if I place my pending order right here, where is my stop loss going to be? Below the low of candlestick number 2. Do you remember that, guys? I think you do. So if I take a horizontal line and I extend it like that, the low of candlestick number 2 is there. Don't go ahead and do that, just leave a little bit of space, please, every single time. You will be going ahead and you will be going for at least a 3-to-1 reward to risk if you want to make this strategy work. Okay, now if this fails us, we will go ahead and we will use the one below it. There you go. Beautiful example. What would you do, Chris, if this would have failed you? I would have used the other FVG, so the wick above candlestick number 1 would have been this one. Actually, I have two areas here. One here, the other trade would be going here with a stop loss below candlestick number 2. So this would have been your second trade if the first one would have failed you. Okay, first example, success. Let's see for how long this played as well. It is important to see that, and you can go ahead and backtest it on your own. Of course, this went for enormous amounts, guys. First example shown. Let's move on to another example. So I moved a little bit forward and I see yet another impulse. Do you see this beautiful impulse towards the upside? You do. How many fair value gaps do we have, guys? We have one fair value gap right here. Good. Does candlestick number 1, which is this one, have a wick above? Does it have a wick above? Yes, it does. Highlight it, guys. Simple as that. Extend it to the right. Good. There you will be placing one of your trades if price goes down. Let's see. Good. I also have now another fair value gap, which is created out of which candlesticks? Where is my other fair value gap? It is this fair value gap right here. Which candlesticks is it being created from? Candlestick number 1, number 2, and number 3. Does this have a wick above candlestick number 1? Yes. Highlight the wick for me. Go ahead and highlight the wick for me. Here it is. You highlight the wick. You're placing a pending order there. Are we gonna be creating another FVG? Oh yes. Which candlesticks created the FVG? Candlestick number 1, candlestick number 2, and candlestick number 3. Very good. Here is the FVG. Does candlestick number 1 have a wick above? Remember, the impulse is towards the upside. We want to buy. Yes, it does have one. Let's go ahead and highlight this one as well. Nice. Let's place the pending orders now. This is your candlestick number 2 in every occasion. This is your candlestick number 2. And this is your candlestick number 2. And we have highlighted the wicks of candlestick number 1 in all occasions. So one pending order goes here with a stop loss right here. And of course, at least a 3-to-1 you will be targeting. The second one would go here with a stop loss below this area. And the third one would go here with a stop loss below this area. Now, The strategy that we have in the signals is miles better even compared to this strategy that I'm sharing here for free. Oh my goodness, look what happened. Price is coming back, tapping on your area, giving the 3-to-1 within seconds actually, maybe minutes, and then going way higher. So even if you have 2 or 3 losses or 4 losses in a row, you can see what this strategy can do, guys, if you let the trades play out. It is absolutely crazy what this strategy can do right here. Good. We have shown a second example. Those examples you can use at the best prop firms that I have on chrisfxoriginal.com/best prop firms. Not only that, I have the best discount codes, and you also get access. You email me when you purchase through my links, and with my codes, you email me and I give you access for free in the trading signals. So imagine that, all of those people talking shit about me or about anyone out there, I am the one who is gonna give it to you for free only by using my discounts, which are the highest in the market anyways. You're getting the highest discount, I'm getting paid a very minor amount from affiliate commissions, and you're getting access in the signals that are $89 per month, absolutely for free, where I'm going live and I'm taking my trades live every single day, most days twice per day. Good. Let's now go ahead and show a bearish example. Here, what do we see in our bearish example? This is also going to be the last example of this tutorial right here, of this strategy. What do we see? We see an impulse towards the downside. This is proof that this strategy, you can modify it, but it doesn't need any bias. It also, you can call it changes character, or however you want to call it, break structure, I don't care how you call it. The important thing right here is that we have a very strong impulse towards the downside. We go ahead and we identify our areas. We have a wick, we have 2 FVGs first of all. One FVG is this one and one FVG is this one right here. Both FVGs, candlestick number 1 has a wick below it in this occasion. Number 1 candlestick also here has a wick below it. So it satisfies the first rule. Very good. So I will go ahead in this occasion and place 2 pending orders. The one should be having the stop loss above candlestick number 2. Now this is quite ridiculous in my opinion, okay? If you use on Nasdaq a 15-tick stop loss, you are almost always gonna get stopped out in these occasions. I am doing sniper entries with my strategy, but this strategy, it is quite difficult. I don't have stop losses like that. I have larger stop losses, of course. The entries are sniper entries though. So in this occasion, we can kind of modify it and go probably and place the stop loss in the middle of the FVG, because if candlestick number 2 would be having, let's say, a large wick, then it is absolutely fine. Now it is very narrow. So we will do that and we will go for a 3-to-1. Very same thing right here. The other order would go here with a stop loss, as I told you, above candlestick number 2 out of the 3. This is still ridiculous, 14 ticks. So we can go ahead and say, let's place the stop loss around, let's say in this occasion, the 50% of candlestick number 1. Let's modify it a little bit and do something like that. Okay, otherwise guys, it's not realistic. It is very small and you will get stopped out a lot. Okay, so we have 2 orders. Let's see how they work. And we are in the trade. And this is absolutely phenomenal. This is absolutely phenomenal. This hits a 3-to-1 reward to risk. And you see guys, even if I would have had the stop loss above candlestick number 2, it would have worked in this occasion. Let's see the second one. We are in the trade and we win the 3-to-1 as well. Fantastic strategy, absolutely fantastic strategy. Doesn't come, of course, even close to the strategy that I'm teaching, and I'm showing my live results every single day in my signals group. Again, it's not a signals group that is gonna tell you, as you might be expecting, place entry here, stop loss here, or whatever. It is giving you the exact entries, exact entries. But of course, I'm doing a bunch of education, I'm going live daily, and I'm helping you adjust the strategy to your own liking. Some people are more aggressive with the stop losses, some others want to go more towards, let's say, intraday trading or swing trading even, okay, you can adjust the strategy to your own liking. Many traders have found success. You can ask them, they are inside, those who put in the hard work, they have found enormous success. I have made $9,126 just from trading this month on April, and I have shown every single withdrawal that I have done to my group, and they have seen all of my trades as well. Every single live though, also every single live is recorded. So you don't wanna pay. You don't wanna pay right here on my homepage and go to my website and pay $89 per month. You can say this is a lot of money, but you can join for free. Buy any of the prop firms with my code, okay, with my code, and by clicking on those links right here, wherever you click, it will take you to the prop firm, okay. Use my code, get the best discount, and email me that you purchased, and I will give you access for free. Fantastic, everyone is happy. Or you can learn once and for all with the ChrisFX mentoring and be done with it forever. So let me know if you liked this strategy in the comment section. What else would you like to see? And this is gonna do it for today, traders. Thank you all for watching. Until next time.